Hey folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Sunday, March 22nd, 2026, through the eyes of the Matrix. Friday was a bloodbath for the bulls. Every single little bounce they got sold off. It was pretty much panic selling. But what I'm going to show you is it's really strange because there was a lot of buying, institutional buying going on, and it caught us. We took a little lump on the fund on Friday. We'll make it back. We're still up. We got caught a couple times, and I was fighting a gorilla, and I'll show you why. It wasn't just blindly buying, but I'll go through that in the other charts. So you can see that we have IWM. This is a daily chart approaching our Gann line, and then below that we have the secondary accumulation zone right here. We still have some room to go until we're in completely oversold levels, but I do anticipate we're going to get a bounce. And a lot of it, it's going to have to go with, are they going to run with Trump saying that he's downgrading the war or whatever it is and run higher? Possibly. I don't think it's going to be that long. If we do get the bounce, it'd probably just be a short squeeze because he can scream this as long as he wants, but I just don't believe this is over. I think oil is telling us that story, and it's going to be very difficult for him to get out of this one. And I think he got himself in a complete pickle. I think he was led to some bad information, and he's, the big thing is going to be oil, because if we see oil going to $200, a barrel. It's and gas prices are at $8. We're going to be bleeding internally, and the market is not going to like this, and we're going to go down a lot further. If somehow he can pull a rabbit out of the hat and somehow open up the straits and get out of this war and really just stop listening to whoever's giving him this information, and then we'll be back to good, normal again. But from what I said, I don't really think this is going to be ending until sometime in May. Whether it be maybe the war might be over, but I think the oil will not be back down. I think that's going to be the biggest catalyst. So we'll see. I'm hoping it all works out. I just think this is an unforced error on his part. I don't think that we should have done what we're doing right now. Regime changes are not good. They never have. And I just, like I said, I think this is an unforced error. So we had all-out panic selling on Friday. Again, we're running into our support zones here. So let's now take a look at some of the shorter-term charts, and I'll tell you why I got caught. There was just buying this entire, when we were down here, we had divergence buy signals, we had liquidity heading up, but the price just kept going down. So yeah, we got caught in some positions. It wasn't fun. The quantums got hit again. So overall, I think we lost about 5,000 on Friday. But again, we've made money. At the past couple weeks, so we had to give some back. We're not going to be right every time, and this one was definitely a little bit of a it was a hiccup. So if the bulls come in and they try to gap it higher, this is our resistance zone. I think it's going to be pretty difficult to get through. That's going to be between the 245.18 and the 246. They can get above it, then possibly we're coming up and closing the gap and testing our secondary, and that's somewhere around the 247, 248 level. But like I said, the bulls have their work cut out with them. You can see our duration is just turning up, so if they can run off of this last 10 minutes of the day where they ran IWM from 240 up to 242, then yeah, they have a chance. But like I said, it all depends on what the futures are going to do. Are they going to run with the that whole notion that they degraded or whatever it was, the war, and they're going to try to move it higher? We'll have to wait and see on that. On a 15-minute chart, again, we have some bullish divergences here. Duration, we have a full duration. This is, we had buy, all buying down here. So from just a liquidity view, it would make perfect sense if we rallied on Monday. Again, it's too hard to say before we see the futures open. If they open higher, then yeah, they may just do a complete short squeeze and get us right back up to these levels. If there's still going to be, if oil ends up continuing higher, then I think it's going to put pressure on the markets. But from just a liquidity and a matrix view, it would make perfect sense if we had a rally somewhere up into the 246, 247.50 area, and then up to the 249. But we'll have to wait and see. So taking a look at a 2-hour chart, well, here we go. We're running into that. This is our GAN line, and then we have our secondary at the 238 level. So near, we came pretty close to our support levels. You can see we have some bullish divergences, and this is a 2-hour chart. We have liquidity or buy-sell pressure starting to move up. Again, look at these. This is just all buying. That's what really kind of shocked me on Friday. I was like, I'm looking at the liquidity heading higher, and I was really, really anticipating that we were going to get, a $2-3 rally off of that, and it was just, like I said, nonstop selling. So it was not fun on that. So let's take a look at the spiders here. Let me do this. Hang on one second. Okay. So the spiders, if we do get some kind of rally on Monday, this is our primary distribution, the 254.58, and then up to the 257.12. If they can get above it, you can see we also have a moving average. So this is going to be pretty difficult for the bulls. If they can, then they're probably going to come up and close the gap at the 259.66. Liquidity heading higher. We have our liquidity divergence indicator heading higher, and this is, like I said, I was waiting for the signals. We were getting a little bounce and just kept going straight down. I think a lot of it had to do with options expiration. I know there was I think it was triple witching, and I think that really had a lot to do with it. So we're gonna have to, because it was definitely an exaggerated move on Friday. So that may have had something to do with it. But again, you can see we have some regular just price resistance at 651. Above that, then we start looking into our primary distribution. 15-minute chart, again, bullish divergences. We have full duration here, liquidity moving up, buy signal. They were just being ignored, and since I put this together, I haven't really seen it like that, where we were seeing buying the entire time, and we just kept going down. Typically we'll get a buy, and then we'll get some kind of gap up. This was the only move up right here. It went from 655 up to 663, but then right back down again. But you can see there's just a ton of buying. We have this massive liquidity divergence. So again, just looking through the eyes of the matrix, it would make perfect sense to see some type of rally on Monday. This is the hourly chart. This is our primary accumulation. They broke through it. If they continue lower, 639 and then 635.72 are our GAN target, as well as our secondary accumulation. So we got to keep an eye on those zones. And then just looking at a daily, again, this is institutional buying, and typically when we see those, we get a pretty nice rally. So this is 2 days in a row. We got a buy signal there. Last time we had it on a daily was right here. It was this low, and we saw spiders go from 676 up to 694. So I'd be very careful shorting. Again, the media and the geopolitical stuff that's going on, yes, that's on the bear side right there. But it just, like I said, looking through the eyes of the matrix, it would make perfect sense if we saw some type of rally on Monday. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I will talk to you guys in the morning.